Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage your risk. I'm your host, Jim Matthews, reporting from the winter wonderland of Chicago. It is a whiteout here in the Chicago office. We've got the blinds open. You can't see anything. It's just swirling snow. There's wind advisories. We got pretty lucky here through the month of November, but when winter hits, it hits, and it's here. Joining me today from the lovely Kansas, Director of Feed Foundations, Mr. Jake Kingsley. Joining us from California, Senior Market Advisor on our Feed Foundations team, Miss Natalie McCarty. And from Wisconsin, Dairy Market Advising Director, Miss Katie Burgess. Team, how are we today?
A little chilly.
Enjoying the snow.
Are we enjoying the snow? Are we happy?
My 4-year-old was pretty excited to build a snowman this morning.
The kids were pretty jacked up this morning, and it just, you know you're old, right? When the kids are all riled up and you're like, dang it, it snowed. But we're happy for the kids. Natalie, you are recording from the famous she shed in California. Did it snow on the shed this morning?
No, but I did have to turn on the heater today.
So you've got the heater rolling. So things are still chilly out there.
Yes.
Okay, gotcha. Okay, but everybody's managing. We'll give a quick shout out to Jake Kingsley last week. Jake, Katie, and I were on the road in South Dakota, and you hosted the show. You kept it clean, crisp. You had 3 guests, and you kept it within like 15 minutes. The viewers all appreciated it, and then we went right back to having Jim. I've already gone over in how much I've talked so far. I've already gone over.
Yep. Hopefully Paige put a warning on the start of this one to turn your volume back down.
Turn your volume down and feel free to skip to the 4-minute mark when Jim shuts up and the actual smart people start talking. With that in mind, Paige, if you would kindly timestamp the broadcast. It is Thursday morning. It's about 10:15 Chicago time. Looking at the markets real quick here this morning, there's some red on the screen in the grain and feed markets. We have corn trying to pull back a little bit today. Corn's been pretty stubborn in its trade, in a sideways range, if you will, for both that December and March contract, but down about 3 cents this morning. So Dece, which will be approaching its first notice day here, the day after Thanksgiving. Dece is down 3 1/4, back under 4.30 at the moment. March trading just under 4.37. A lot of that action in the corn market supported by wheat, and the wheat market is down about 2 cents here this morning. March wheat trading at 5.70. We have Jan beans, also bright red here today, down about 10 cents. We're back towards 9.80 on beans, and soybean meal, that not as stubborn little byproduct, is still holding under 300, really all the way out, even including that May contract now. We've got Dece down below 290. Jan will be the front month here soon, is also just under 290 at the moment. So a lot of red in a good way for the feeder of these products, our dairy and livestock producers watching and listening to the show. Speaking of those dairy producers, I think we had a big milk production report yesterday, and we will turn to Miss Katie Burgess from Wisconsin. Katie, big report yesterday. What'd you think of that one?
We had a big report yesterday, and similar to that red you see over in the grain space, less exciting for dairy producers. We've got a decent amount of red this morning in the class 3 and cheese space as well. So our view on that report yesterday, it was long awaited. The number itself was probably neutral to the markets, but one of the big questions that we had going into the report was, we've got a lot of new cheese capacity coming online in the U.S. here over the next few months. We've got new plants in Kansas, South Dakota, Texas, New York. People are going to be ramping up. And a big question all along has been, are we going to have the cows to make the milk to help keep those new cheese plants full? And I think coming out of yesterday's report, the answer was, it seems like we might. So a couple notable data points from the report yesterday. USDA showed cows ticked up quite a bit in October. and revised the prior month higher. So now we've added 37,000 head to the herd just in the past 2 months. And when we look at where a lot of those cows are, they're in those spots with new cheese capacity. So on a year-over-year basis, more cows in South Dakota, more cows in Texas, more cows in Kansas. And so I think really one of the questions the market has been struggling with as we think about 2025 is we're going to have capacity. Where's the milk going to come from? So I think seeing the market down a little bit this morning was the market saying, okay, we feel a little bit more confident that those cows will be there. A big question is, heifer prices have still been sky high. But we believe that these producers who've been putting up new barns, building new facilities, they probably had heifers waiting in the wings because they wanted to make sure they had what they need, when it's time to make milk. The other big question heading into the report was, what's going on in California? So we know, talking to our producers out there, I know Natalie, you and I have had a number of conversations with folks that avian influenza hit California pretty hard during the month of October. For the producers who got it, it was a double whammy of the virus on top of heat stress. Cows were really struggling. As we got the data yesterday, it showed overall California milk production down about 4%, which was in line with what we were expecting. That being said, as we talked to others in the industry, there was a very wide range of expectations going into the report. So, now that we have a number, I would say again, that was probably in the middle of expectations. So not bullish or bearish coming out of there. For a lot of dairy producers, they were hoping to see maybe a little bit more bullish number, hoping that could maybe provide a rally here into year end. But I don't know that it was enough to give us that. As we look forward, avian influenza cases in the state are still growing. So I don't think we're out of the woods yet from a California milk production perspective. But what the report showed us with U.S. growth up 0.2%, even with California down in the month of October, there was enough growth in these other regions to support an overall positive U.S. number.
Excellent, Katie. Yeah, it was a lot of friendly wagers in terms of what the estimates were in the Chicago office yesterday afternoon. But to your point, a very wide range of estimates heading into this thing. California definitely being that wild card number. I think depending on where people sit within that state, things are bleak. Production's way down. In other parts of the state, it's this thing is come and gone. We're recovering a bit. So a very wide range of expectations coming out of there. So in terms of your thoughts as we move through the holidays, then, Katie, and into early 25, how do you kind of see milk pricing trending over the next few months?
I think now that we have a little more confidence around what's happening on the supply side and that it does seem like outside of avian influenza, the herd is growing. I think from that perspective, now the most important thing to watch will be what happens on the demand side, particularly what happens with exports. U.S. cheese prices are at a discount to global values right now. So hopefully that comes and helps us get some cheese moved. But as I talk to customers, if we end up with too much on the supply side and exports aren't there, it could be pretty pessimistic for prices next year. If the exports are a little bit better, maybe not so bad. But I do think right now it's an important time that if you don't have your risk management plan in place for 2025, you should be considering it because there are a lot of moving pieces right now. And what we learned from 2024 is this market can go lower than we thought. It can go higher than we thought. So it's good to be protected just because we don't know for sure.
Okay, excellent. Thank you for that, Katie. And one of those moving pieces is, of course, the feed market. And speaking of California and feed, we have Miss Natalie McCarty here today. Natalie, what is happening out there in California? There's been a lot going on in terms of maybe some environmental discussions. We've had the big NOPA crush report out a week or so ago. We're trying to track things closely. Obviously, Katie mentioned bird flu a bit, but what are you seeing from the she shed of California?
So I think when you talk about California specifically, one big piece of information that's come out here in the last couple weeks, the California Air Resource Board on November 8th approved updates to its low carbon fuel standards. What is that? It's aimed at reducing the carbon intensity of the state's transportation fuel. What does this mean to feed folks? Within that, there's a lot of different things, right? They talk about solar energy, electronic vehicles, but for the feed person, they were making decisions about biofuels, which soy oil, canola oil, corn oil goes into those biofuels. They are putting a cap on it and changing some of the rules as far as the credits that can be received on those oils. Again, I think the reason that's relevant for the feed folks, we need to see where this thing goes. There's been a lot of new soybean processing plants and canola processing plants that have been built with the idea that we're going to have a strong nationwide biofuels program. California is very, very big in biofuels, and a lot of people look to us for direction. So the fact that they've made these rules in California, we'll kind of wait and see what happens nationwide. I think the other thing politically, obviously, we have a new administration coming in January nationwide. I don't think that administration is as friendly to biofuels as possibly the past. So again, I think it's something just to keep on our radar screen, because a lot of the reason that the soy products have been down is because of this belief in biofuels and a strong soy oil and canola oil market.
Yeah, I think we've talked about the soybean oil market. If you look back over the last few weeks, really, and even dating back to August, I mean, you've seen a very healthy, bullish move in soy oil really up until, let's say, right after the presidential election, maybe a few days after. But you had a couple things happening there. And I think one of them was also global veg oil pricing was firm. There were a couple different policies coming out of like Indonesia on their biofuels blending requirements. So maybe had like a global squeeze on palm oil pricing at the Malaysian exchange, really making our U.S. soybean oil very attractive on the export market. So you saw a very healthy run up in pricing, which one could argue is somewhat inherently bearish to soybean meal, because as we continue to crush beans for the purpose of soybean oil demand, you're just going to have this excess meal supply that you're not necessarily crushing beans for. I think, Natalie, when you've been tracking this very closely and you've been very diligent with this, when these new changes came out from the state of California, there's been a pretty swift move back lower in bean oil pricing now over the last 2 weeks. So this is very impactful. And as you stated, the nation from this perspective, they do look to California, and they've had this very aggressive, renewable diesel mandate to essentially eliminate the use of diesel in their vehicles throughout that state. And a lot of other states kind of gauging to see what this looks like. It feels like California now wants to take a more aggressive step towards favoring, their solar, wind, their electric vehicles. So maybe, I think, still friendly to renewable fuels, but I think some of these caps on what they'll do with vegetable oils are going to be really interesting for the rest of the market. Natalie, we also had the NOPA crush numbers out a week ago, and this all kind of ties in together. What was your take on that report?
NOPA is the National Oilseed Processors Association, to which most of the processors in the nation belong to NOPA. Really, really strong October crush numbers, actually record high. Crush was up 5.4% over last year. Big, very big. Means they're making a lot of meal and a lot of oil. The interesting thing that came out of that report as well is that the oil side of things, they not only report crush, but they also report oil stocks. The oil stocks were still very low and not growing, which was a positive. So that means, at least currently, we're getting rid of the oil. Now the key is for them to be able to get rid of the meal in the marketplace. We've started to see basis depreciate on soy a little bit, not as much as we'd like to see. We definitely have seen the canola basis market go down quite a bit because, again, the Canadians are doing the same thing we're doing. They're crushing for the biofuels. The thing about canola is the canola seed actually has more oil in it than the soybean seed. So inherently, they always get more money for their oil. And with biofuels coming in, that definitely is the case.
Okay. Yeah. Thank you, Natalie. And this is also, we've seen soybean meal on a very steady decline now, really for about 6+ weeks. It does feel like that market has somewhat steadied, right? It's been in a little range itself over the last week or so. So, this big break in bean oil didn't necessarily elevate meal, but it does feel like it kind of stopped the downtrend at the moment. So it's not taking off or running anywhere on us for the time being, but it is a little bit more flat in its trading range of the last week. So we'll keep a sharp eye on that. And let's turn her over then to Jake Kingsley in terms of what he's seeing throughout the rest of the feed market. Jake, what are you seeing out there, buddy?
Yeah, so I think tying up the rest of that soy complex there, like you said, we've seen basis start to inch lower, and we've been watching soy hulls as well. Soy hull pellets have been, in my opinion, a little bit overpriced relative to where they normally would be this time of year. And I think hopefully we see with that record October crush, a lot of these plants are back up to capacity and really reloading the pipeline. We'll see probably a decline in soy hull prices there. There's been a handful of other ingredients, the distillers and gluten and some of those products. They've been probably some of the more attractive prices in the ration. We've had folks stepping in and getting a fair bit of distillers and related byproducts bought, with ethanol cruising right along at a very high crush capacity. Margins are still fairly attractive in that program. Corn's been at some of its better prices in the last handful of years. So we're really just cranking out a lot of distillers right now, going ahead and taking advantage of that. Gluten tends to go where distillers go, so getting some of that bought up as well. Corn basis, part of the input cost of some of those ingredients, had bottomed out at harvest in most of the Midwest and perked up a nickel or a dime as the bin doors closed, and you got to keep this stuff flowing to continue processing. But it's steadied. We don't anticipate a big run higher, and we didn't see as dramatic of a drop as we had hoped for at some of the rail destinations, like you were watching there in California. $2.25 a bushel for ground corn basis out in your part of the world is probably covers a pretty broad stroke of the market, and we had been shooting for something under $2.15 or pushing closer to $2, and we just hadn't quite gotten there yet. It's hard to give up on that target with as big of a crop as we've had, and knowing that there are a lot of ground piles in the Midwest. And so kind of studying the carry there, and it looks like most of that corn, the market is telling most of that corn that it should move somewhere between January and March. So likely we'll see a flush after the first of the year. And if we don't see a breakdown in basis at that point, then I don't know that it gets much better than where we're at. So still monitoring that one. And then finally kind of watching cottonseed. Seems like those numbers have come back to earth a little bit after the hurricane moved through the southeast, and particularly Helene moving through parts of eastern Georgia there. There was a lot of concern with how much damage that would have done to the crop, and getting a little bit of that assessed, and gins up and running. Texas gins are getting going now. Prices have come back down. They haven't dropped any lower than they were before the hurricane, but they are back to levels pre-hurricane now. So opportunity to step in and maybe get some of that stuff done. I don't foresee a big move in price there. Maybe a little bit of a drift lower, but you could also see it kind of just grind slowly higher. I don't expect a whole lot of change.
Okay, excellent. Thank you for that, Jake. A lot to chew on in the feed market as we push into the holiday season. And for the viewers out there, we will not be recording next week due to Thanksgiving. So happy Thanksgiving to everybody out there. Very thankful for this squad, everybody here at EverAg, and of course our viewers and our listeners and our families. Jake, what are you looking forward to next week for Thanksgiving?
All the food. I didn't get a chance to chow down last year, so I'm pretty excited for it this time around.
You didn't, buddy. I'm excited that you get to physically eat food for Thanksgiving this year. That's something to definitely look forward to. Natalie, what's happening out in California?
I'm going to the beach.
Ooh, going to the beach. I've got a whiteout over here. It's snowing like crazy. Going to the beach. Good for you. That's fantastic. Katie Burgess, Madison, Thanksgiving.
Going up to the farm by Green Bay. My son's favorite thing is to watch feed get mixed up for the cows. So, future fan of the show, and for now, loves to watch the skid steer mixed feed.
Sounds like a potential member of the feed team. Sounds like we need to get him ready here. We've got some time. I think we've got a spot for me here on the squad. Looking forward to that. I will be heading to Pittsburgh, Pennsylvania. Thank you for asking. And since we're on the internet, I'm very excited about that. So, happy Thanksgiving to all of you. A huge thanks to each of you for joining the show. Great to have your insights today. We'd also like to thank Corey and the EverAg Insights crew for their support. Thank you to Paige and Lexi for their production magic. Thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.